Hi, this is Jack, and this is going to be my bar-by-bar review of the S&P 500 futures contract for Monday, December 16th, 2024. The first bar of the day is a big gap up. It's a bear doji bar, which tells you that we're probably in some sort of trading range, and the gap up may be rejected here. We have yesterday's high not far above, and we may get there, but we also have the higher time frame EMA, the 20 EMA from the hourly chart, represented by the 221 EMA on this chart, not that far below as well. We have the trading range high of yesterday that is a test target as well, and we're inside of yesterday's range overall. So I expect a trading range and sideways on the open. Bar 2 broke out below 1 and reversed up. It's a reasonable swing long for the bulls, but for me, I don't have enough information here, so it's better to wait. And bar 2 is entirely overlapping bar 1. Bar 3, we found sellers above bar 2, and we found buyers below bar 2 as well. It's a tight trading range, and we have bar 3 closing above the low of bar 2, which tells you that the bears are not as strong as they could be, and that reduces the probability of a bear breakout. We do have a strong sell signal bar here, but with this weak close, we may find more buyers down here than sellers. And bar 4 is a bull reversal bar, breaking out below 3 and finding buyers and undoing the damage that bar 3 has caused, but we're forming lower lows and lower highs, at least on a smaller time frame, and on this time frame we're just going sideways, so probably better to wait. The stop entry for the bulls triggered, and we have a good entry bar. You could see this as a small triangle breakout, and for that reason I expect a pullback on the next bar. Also, because we have a tight trading range here, we're trying to get a bull breakout, and I expect there to be disappointment, which is why we got 6. It's a deep pullback into bar 5, testing the close of bar 4, the open of bar 5, and finding buyers, probably for a second leg up from this breakout. Overall, the day so far is more bullish than bearish, but it's still within a tight trading range, and we're still going sideways. It could still be a lower high. We're under the high of 1, so probably better to wait. More follow through on bar 7, strong bull bar, but because we got bad follow through after this good bull bar on 5, I expect there to be bad follow through here after bar 7. And I'm going to change one thing about the chart so that I have a little bit better. So that way I don't see too much information here. So bar 7, good for the bulls, second leg up, could be 2 legs up in an overall trading range, and we're testing the stop entry sell signal from yesterday that led to the strong sell-off. So I expect us to test this level and pull back. And that's what happened here on bar 7. Bar 7 is the first strong bear sell signal bar of the day. We have 2 legs up. It could be a wedge. It could look something like this. And now we need a leg or 2 down. I think that 7 is a reasonable swing short. We're at resistance. We have a lot of overlap in this rally. It's 2 legs up in an overall trading range, and it's reasonable to sell below this bar. The only problem is we're in a bull environment. We've gapped up above both moving averages. The 20 EMA has sloped up steeply, and the 200 EMA, I say 200 is 221, is starting to slope up as well. We held support here. We have 2 legs down at support here, the start of the channel. You could argue something like this. In any case, it's a reasonable stop entry short, and I'm not sure that the probability is 60% that we'll get down here before we get up here. So you got to be quick to get out if you get bad follow through, but reasonable. We had a small pullback on 9 and then a sell-off. Small tail, I expect us to go a little bit lower, but we may need to pull back a little bit before we do. We found buyers at the low of 6, and we may find buyers down here again. The bulls see a double bottom after a breakout, testing the midpoint of a triangle on 9, and the bears want this breakout bar to get follow through and find out what's below bar 4. So bar 9 probably going lower, but we may need to pull back first. Not much of a pullback here, and bar 10, more good follow through. It looks like a duplicate of bar 9, and that's sustainable selling. It's relentless selling. So far, the bears have achieved their minimum goal of reaching a 1R target, and we're closing below that level, and I expect us to go a little bit lower. But we may need to pull back. We're at the bottom of an overall trading range, and it's not ideal to be selling low in the bottom of a trading range. We have a whole round number, 6140 here, and we have both EMAs down here as support. So we may find buyers before we go too much lower. Climactic bar on 11, finding buyers at both moving averages and the whole round number and reversing up, forming a bull reversal bar. Not much of a body on this bar, so it may be more of a trading range bar, and for that reason, we may find more sellers above than buyers. Bit of a surprise on bar 12, probably always in long and probably going higher. You could look at this as a breakout with a two-legged pullback to EMAs at support, and now we're starting to rally a second leg up from the gap up. Reasonable to expect on reasonable to bet on higher prices. The only problem is that bar 12 is a bit of a climactic bar. The body and the range of 12 is similar to that of 11, and that is not sustainable behavior, especially on a trading range day. We vacuumed up to the top end of the range, and we may find more sellers up here than buyers. But good follow through for the bulls. Another, basically a duplicate bar of 12. Smaller body, so we're losing some momentum, and the problem for the bulls is we're at the top of an expanding triangle. So we may find more sellers up here than buyers. And we have yesterday's high as resistance here, represented by the small dashed green line. I expect us to go higher, but we may need to pull back first. Losing momentum on 14, but still probably going higher, and then 15, bear breakout. The first reversal down is likely to be minor, so we found buyers down here. It's also a breakout test of the 8 high. Channeling a little bit lower, inside bar 16, but a lack of conviction by the bears. If this is so bearish, why do we find buyers below 14? 17, buyers below 15, and buyers below 16, closes above the midpoint. Reasonable to expect a second leg up from this strong rally. But when I look at this picture, I can't help but think that there may be sellers above this strong microchannel. Any bears that have held short through here may look to sell higher and then look to buy on whatever sell-off we get. So that'll create support down here. We also have the breakout gaps between 11 and 13, which represents support as well. We could find buyers anywhere inside of these gaps. And the breakout point here, which we're testing on 15 and 17. Doji bar on 18, failed bull breakout. We may need to go lower, but every time we go lower, 15, 17, we find buyers. So I expect us to form a tight trading range here. And then we go sideways for quite a few bars. We tested the high of yesterday again and formed a reasonable sell signal bar that triggered, but I don't think the bears were able to get 1 times their risk. Actually, it does look like they got 1 times the risk. So if it's all that bullish, how come bears are able to scalp and get 1 times their risk? Maybe it's not all that bullish. But 22 reversed up, finding buyers below 19, 17, and getting into the gap created by 11, 12, 13. Also testing a whole round number, 6150, and finding buyers. Reasonable to take the stop entry for a swing up, but so far we have a tight trading range on the day, and I expect whatever breakout we get not to get very far. And if I had to guess, I'm a little bit more bearish than bullish, but it's confusing. We're in a trading range. 23, bull bar, channeling higher, but then trader sold to close on 24. So still inside of a tight trading range. The range could be something like this, and I expect more sideways prices. 25 consecutive bear bars, possibly going lower, but reversing up from the EMA in a prominent tail on 25 tells me that we may find buyers down here, which is why we formed a bull bar on 26. 26 has a prominent tail, and this could be disappointed bulls who are long up here, disappointed with the sell-off, looking to get out somewhere around the middle on 26, creating a tail here. But we're holding at the moving average, we're holding at support, this whole round number, 6150, and we may continue to go higher. Outside down 27, but this may be more of a buy the close bar than a sell the close bar because we're at the bottom of a wedge bull flag, or at least a wedge bear channel at the moving average. So bad follow through 28, reversing up, creating a strong buy signal bar, is relatively low in the range, but honestly it's in the middle of this tight trading range, so it's not ideal, and I expect it to get disappointing follow through. Good follow through 29, possibly going higher. Consecutive bull bars, reasonable stop entry for the bulls, but smaller body and smaller bar tells you that the bulls are not as strong as they could be, and that reduces the probabilities that this rally will go much higher. More follow through 30, but again, smaller body and smaller bar right at the high of yesterday, which is where we sold off before, and we may sell off again. Bar 31 outside down, testing below the stop entry for the bulls and prominent tail. We may find more buyers down here than sellers, but overall tight trading range, probably better to wait for the breakout. Bad follow through 32 bull bar, but we may find sellers above, disappointed bulls with 31 looking to get out on whatever rally we get. Good entry bar for the stop entry bulls on 33, and probably going higher. Looks like we're trying to make a higher low at the moving average. 32, 33 consecutive bull bars, second leg up from the rally on 28. Bad follow through 34, not ideal for the bulls. And I don't think we've yet reached 1R of this stop entry or 1R of this stop entry. So we still have a little bit more work to do before it becomes clearly bullish. More bad follow through, bear breakout 35, and then inside bar bull bar 36. Small tight trading range consolidating below yesterday's high. We're starting to wedge higher, and I suspect we'll get the breakout soon. 37, here's a breakout, but failing to close above prior highs, probably going higher. And then good bull bar 38. 38 is really the first breakout bar. It's closing above resistance, so we need to see good follow through. Minimal follow through 39, it's a bull bar, but prominent tail tells you that we may need to pull back and test these highs before we continue higher. We're starting to channel higher. The wedge bull flagged turned into a two-legged rally, and now we're getting breakout. It could be a larger two-legged move, like one from 27, like two from 32. But let's see what the follow-through looks like. Bear breakout on 40, reasonable follow-through 41. For the bears that took this stop entry or sold to close, you were able to make a 1R scalp. And for the bulls who took this stop entry, you were able to make about 2 times your risk. So we're converting from a limit order market to a stop entry market, which is a trending market. We've pulled back and tested the EMA for the third time in this rally. We're testing the breakout points, the prior pivot high on 30, 35, earlier in the day, 14. So I suspect we'll find buyers somewhere down here, but we may need to go more lower before we do. Testing the high of yesterday on 42 and rallying, reasonable stop entry signal bar for the bulls and probably going higher. Deep pullback and then a small follow through bar on 43. We may find profit taking up here because we have a lot of overlap, and this is somewhat disappointing for the bulls. Smaller body, smaller bar, we're losing momentum, and we will probably start to pull back here. We're making a new high of day above 39. I suspect we'll go higher, but probably we need to pull back. 45, bear inside bar. Traders bought the close on 46, new high of the day. We're channeling higher. We have a clear bull trend, making higher highs and higher lows. So I suspect we'll go higher. 46, good for the bulls, but getting close to the top of the channel. And then 47, bit of a climax, bit of a surprise, probably going higher and trying to test the top of the channel. 48, more follow through for the bulls, but losing momentum. And then outside down, 49. Healthy pullback, 49. Testing the breakout point, 44 high, and finding buyers. Didn't quite get there, and I suspect we will get there. But bad follow through, doji bar. Probably disappointed bulls looking to sell this rally and then buy again lower. So reasonable to expect more down. Bull surprise, 51. holding above support, the 44 high. Small tight trading range, probably going higher. Bear inside bar with a close above the midpoint. Reasonable stop entry for the bulls, but may be disappointing enough here that we find sellers at the highs. Trying to channel higher, 53, and then bear inside bar, 54. Reasonable stop entry short for the bears and decent enough context. Bulls may be disappointed here and be looking to give up, which is what we got on 55. 55 broke out below the swing low, tested the EMA, and found some buyers, but we're closing beyond many bars to the left, at least 4 or 5 here, and I suspect whatever rally we get to find more profit taking above these highs. Inside bar doji, and then bull breakout 57. Good buy signal bar, but problem is the context isn't very good. We're in a small tight trading range, and like I said earlier, probably profit taking above these highs. Doji bar 58, and then bear breakout 59. Channeling lower, I suspect we'll go lower, but we're holding above the moving average. We may need to go higher before we go lower. Bit of a surprise, bar 60, bear breakout bar below the moving average. It's 3 legs down. It could be another wedge bull flag at support. Testing the breakout point, 39 high, and closing below that price. 60 probably going lower, but may pull back. 61, here's a pullback, and then micro double bottom and a rally on 62. 62, bit of a surprise to me. It could be a vacuum test of resistance. Here, the high close, 57, 58, probably profit taking above these highs. Instead, trader sold the close, and 63 is turning down right at the moving average. I suspect we're going to go lower. This has been a pretty disappointing rally and a slow grind all the way up. 63, shaved bar, sell signal bar, probably going lower. Bad follow through initially on 64. 65, bull bar, but looks like it's testing the high close, and then profit taking above that high. Good for the bulls. Stop entry worked for at least 1 arm, but now we're turning down and forming a strong sell signal bar on 66. Looks like we're trying to get the bull breakout of this bear channel, and it may be failing. Channeling lower, 67, and then bull surprise on 68. 68's a strong enough surprise for a second leg up, but getting late in the day, and we're approaching the high of day. So we may find profit taking up here. I don't think it's 60% chance that you can buy the close with a stop below, and we'll get here before we get here, so I'd like to see the follow through. Bear inside bar, not ideal, and we may end up collecting bear bars and then have an endless pullback until a give up bar, and we need to test lower. We're at the top of a trading range. It could be a double top with a high close 48 or the high of 49. And whatever bulls, if you're long here, it's 3 pushes up, and now we're collecting bear bars. So after a while, you have to ask yourself, how long are you willing to hold before you give up? And then we get 71, could be the start of a give up by the bulls, and we may need to test lower. We're selling off below the moving average, 3 consecutive bear bars, each with a small gap down. So probably going lower, breaking out below the moving average. Bulls, bit of a surprise, 72. It's a pullback from the sell-off, breakout, pullback, sell setup. Prominent tail, 72. Lots of overlap. I suspect sellers above, possibly buyers below, but this late in the day, probably better to just watch. 73, trader sold the close of 72, breakout, pullback, sell, but now we're at the bottom of the range, and if you're selling down here, stop up there, you got to be betting on a breakout below the low of 61, maybe aiming for a target like yesterday's high or the low of 41. Any of these prior higher lows are test targets. So 73 may be going lower, but may need to pull back first. Good follow through, 74, and then more follow through, 75. Looks like we're heading for the high of yesterday and the swing low, 41. Bit of a climax on 76. We tested below that swing high, and we may need to test lower. Maybe the 32 low or the 27 low. It's clearly always in short and going lower, but it's bar 76, and there's only a few bars left in the day. Climactic bar 77, testing the higher time frame moving average and finding buyers. Looks like profit taking on the sell-off, 78. may go higher, but probably sellers up here. 79 bear bar, and then small follow through 80.81. So honestly, a bit of a boring day overall. I was watching the charts until about 27, 28, somewhere in here. I decided that I wasn't feeling good enough, and today's price action really wasn't moving enough for me to justify sitting here and watching the charts. So I decided to go do something else. I'm not sure if I'll have time to watch the charts tomorrow, but whenever I do resume watching charts, I plan on using the 3-minute chart when I do it. I like the 3-minute chart because it's a reasonable pace comparable to that of the 5-minute chart. It's a little bit faster, but to me, I do think I can read it well enough to trade it. And as long as I follow my process, I know that I'll be okay. And I say I like the 3-minute chart because there's more opportunity here. For example, the rally here starting with bar 7 on the 3-minute chart, reasonable to buy the close with a stop down below, or look to buy a pullback with a stop down below. You have 3 clear pushes down, and now we're reversing up with a strong buy signal bar. That's a buy. At least buy a pullback, taking a chance that we'll at least test the highs, if not get a little bit higher. And had you done that, you would have almost made one arm within 1 or 2 bars. Reasonable to get out below that bar, bar 9, but if you did, you look to buy again on bar 10. Bar 10, I think, was probably one of the best stop entries of the day so far. Of really the day overall, I think it was good enough context to look for a second leg up after this failed bear breakout on 10. Anytime I see a good sell signal bar trigger and then reverse up, forming a strong bull bar, I always think that the bears have to cover above this bar. And that's why we got 11. It turned into a strong bull bar that raced up. And that's exactly what you want to see with the stop entry trade. And it led to 1 times your profit, 1 times your risk before turning down. Then on the way down, I thought it was pretty reasonable to sell the close of a bar like 14 here. I think the context was good to look for a short because we're testing yesterday's bad sell signal bar on 6 on the 3-minute chart. We tested that price level to the tick on 12 and turned down. And the stop entry triggered, but it's a bull doji bar, which is not the follow through that you wanted to see. But then when you get 14 closing on its low, selling off aggressively, this is a big bar. It's changing the character of the market. It's 2 or 3 legs up, testing resistance, and we're probably in a trading range near the middle of the range, and it's reasonable to expect a test of the lows of the range, or at least down to the last buy climax, to the last starting point of the last buy climax. So reasonable to sell the close with either a stop above the bar or above the swing high, looking for 1 times your risk, which would take you down here near the moving average, near the open of bar 7, which is the start of this rally. Good follow through 15, but deep pullback, probably going lower, but you may need to get out above this bar, and then channeling lower 16, it could be an implied 2 or 3 legs down, and we may find buyers down here more than sellers, and for that reason, it's wise to look to take profits if you do get a breakout down here. And then you get your profit bar on bar 17. Went a little bit lower, and then a reasonable stop entry triggered, and bar 19 is strong enough for a second leg up. You could look to buy a pullback, or look to buy the close of this bar with a stop around the open of the bar or below the bar. Maybe below bar 18, but that's pretty big risk. And I think bar 19 is a statement enough in and of itself that represents relentless buying on a big gap up day. It's reasonable to expect there to be follow through after this bar. Let's say you didn't buy the close. Maybe you buy the close of the follow through bar and put a stop somewhere down below. Reasonable to expect a test of the highs before we get down here. We have a significant amount of buying pressure and we have a lot of open gaps. So anyway, that's my read, and that's kind of my plan moving forward. And that's the day. So thank you.